Richard Harris is with us, Executive Director at Port Shelter Investment Management. Richard, good to have you with us here. Mr. Trump, I mean, I think you can agree, disagree, but he generally tries to do what he said he will do. What did you make of it? Anything sort of stand out, jump out at you? You know, those tax cuts are something which we'll have to see, right? What does that mean for the fisc, which is already about 6.5% fiscal deficit in the US? You know, would we see much higher rates and sort of bond yields actually into 2025? Your thoughts?
Well, I think you picked out of all of those clips the one thing that does make real importance, and that is the tax cuts, because he gives no indication on how he's going to fund them. I guess he's just looking at increasing more debt, and of course that leads us into, I think, one of the key issues that many of the more forward-thinking analysts are looking at the moment, which is that the US is increasingly in debt. Okay, they can afford to fund it at the moment. But we saw the same thing with Liz Truss in the UK. She demanded instant tax cuts. Trump is demanding instant tax cuts with nothing to fund it. And of course, what happens then is you get the bond vigilantes, the people who actually price bonds, saying, well, you know, if there's more debt on the market, it's going to be worth less. So you know what that does is mean that interest rates go up naturally. So the whole idea of tax cuts, I think, is very dangerous from the US. I wonder whether Trump will actually be able to do very much because of the bond vigilantes. But, you know, it is a concern, I think, for investors.
Richard, all eyes on the FOMC meet today. While the Fed may still go ahead with a rate cut, you know, there is still some, you know, people are wondering whether he might sound a little cautious in the press conference, because that path to 2% inflation seems to have stalled as per the latest data. What's your expectation, not just in terms of the outcome, but in terms of what he will signal for the future?
Well, I think that's the key issue. The rate cut, I think, is probably quite likely. You know, I think market commentators feel it's almost a done deal. And of course, markets have built that into prices. So what we will be doing is looking forward, you know, what's likely to happen next year. And in a sense, it's anyone's guess. You know, the big question is whether Jay Powell will actually be there in a few months' time, because it's quite clear that he's generally looked to oppose Trump. Trump is very much one for reducing interest rates. After all, he's a real estate developer. That's how he got rich, was low interest rates. His secretary for the Treasury is a hedge fund manager. He got rich on low interest rates. So I think there'll be a push by the politicians to keep rates low. And it really depends how much the Fed is going to push back on that. So it is, I think, likely to be quite a battle there. It's difficult to see exactly what's likely to happen, except that I would say that the biggest probability is that Trump's economic policies are inflationary, are not particularly good for the US economy, and that might indicate that interest rates will go down because the economy is slowing.
Hi, Richard. Good morning and good to see you in. What about India? You know, we have slowed down a little bit, that increase that we are seeing in terms of the stock market action. But, you know, we've pulled back as well, you know, in the last couple of weeks. What's your view getting into 2025? Where does India feature in terms of the top equity markets that you're looking at?
Well, I think if we carry on as we are, global markets stay reasonably buoyant, then India itself, too, will be reasonably buoyant. Don't forget that the markets had a fantastic run this year, and not just this year, of course. So I think we need to bear that in mind, the fact that it will have breathers from time to time. Coming to the end of the year, trading tends to slow down. People tend to have fewer convictions. The delicate period, I think, for India and world markets will be maybe the first couple of weeks of the year, when people will reassess and start to readdress about what they think about 2025. 2024 has been a fantastic year for equities in general, unless you've been in China. But everywhere else, it's really been pretty good. So I think the first couple of weeks, we will see people look to address the issues of the future, and maybe we will see some price downwards. If that happens, then, of course, India really can't resist it. But I think that, again, the base case is likely to be that the markets will continue to look relatively buoyant, and so too for India.
Richard, it's a pleasure. Thank you very much for joining us here this morning.